Hello everybody, CryptoVince here. Today I'm just going to do a quick tutorial about Fibonacci retracement and Fibonacci extension in order to show you how I pick up my entries, how can I use it, and how can I also find my targets in the chart. Fibonacci tool, it's a very interesting a tool in order to see horizontal levels, and especially when it comes to find confluences either between support and resistances, is even between more Fibonacci that we trace. For this example, I'm just going to trace some Fibonacci on Ethereum USDT and also on Bitcoin. For Ethereum, I will be using the weekly, and for Bitcoin, I will be using the monthly chart. First of all, from TradingView, the Fibonacci tool is available here. Those are the only tool that pretty much I use every day: Fibonacci retracement and Fibonacci extension. When you have for the first time your Fibonacci tool, let me go to Ethereum. Let's clear the chart. If I want to trace the Fibonacci retracement, the first things that you should know is that you can add more levels, and in my Fibonacci tools I added also the 0.886, the 0.77. You just write your number and select, and it will add it. And then I also added the 120 the 1.270, so it's the 270 Fibonacci retracement. Second, okay, so and to add, you remember, if you are on a logarithmic scale, to check Fibonacci levels based on logarithmic scale, because it will just make your Fibonacci a little bit different, and I can show you here. For example, on a logarithmic scale, right now we can see the bounce retraced on the 70-70, but if I switch to linear scale, the bounce is actually on the 88. Okay, this is because on linear scale is calculated different than a logarithmic scale, so you always need to keep that in mind. If you don't do that, if you don't switch to logarithmic Fibonacci here, it will just stay linear, and that's not completely okay. Okay, now let's start with the Fibonacci retracement. The Fibonacci retracement is used to know how much a trend retraces. Okay, so if I have a bullish trend here, I want to know how much this bullish trend is retracing in my retrace. Okay, in this case, I'm tracing a Fibonacci from the bottom to the top. Why? Because the 100 is at the bottom right now. Okay, so if I start from here, I will know that this trend is retracing 23, 38, 50, 61, 70, and so on. Okay, remember, you can add also the price in the Fibonacci. If you can play out with the tool here, you can add prices. You can just remove percentages and leave your Fibonacci like that, and you can just cancel it all. I usually just leave my percentage. So this is the most simple way, and I mean, I know pretty much all of you should know this by now. I just wanted to show you what I can do with that too, and how I can manage to use Fibonacci retracements also for targets sometimes, and we'll go over that in a bit. Now, we just don't trace a Fibonacci retracement of a bullish trend, but also of a bearish trend. So if I have a bearish trend and I want to know how much this bearish trend is going to retrace bullish, I can trace a Fibonacci retracement of this bullish trend, this time from the top to the bottom. And you can see that the 100 this time is on top. So if you don't know, if you're a newbie to this, you get confused, just think that 100 has to be at the bottom of what you're looking at. So if I want to know how much this is retracing, well, 0 has to be here, because I know now this is retracing 23, 38, 50, and 61%. Okay, so the Fibonacci retracements is used to know how much a trend is reversing, either if it's bullish, either if it's bearish. Okay, so this is very simple. On the other hand, for example, at the moment we have a bullish trend and it's retracing. I want to know how much this trend can drop. I just need to trace Fibonacci retracement, and Fibonacci retracement, it's usually, you just need 2 points, right? You just need the bottom and you just need the top of a trend, in this case bullish. So I'm gonna go from point A to point B and trace my level. I know now that is retracing 50%. Sometimes this might get difficult if you have massive wicks, and usually Fibonacci, that level of, usually if it's a wick, sometimes doesn't count as a solid level, when sometimes we have a resistance level that is built by 4 candle close here. So sometimes when I see a wick that is just too long, I skip it. In this case, not that bad. I mean, if I go a little bit lower, you won't see too much change. But if by dropping my Fibonacci, some levels that I see match with Fibonacci levels, I rather use this way and not that, if I don't see any bounces. Here doesn't change too much, so I can just pick one or the other. Sometimes, remember, this is just a tool that you use, so it doesn't have to be mathematically perfect. Like in this case, I have a wick here. Should I use the wick or not? I said when it's just so quickly, I used to skip it. In this case, the bounce is on the 70-70. If I skip that and I just go from the candle close, I will see the 78%, which is looks like a more solid, more legit way to trace that the Fibonacci. Okay. Now, I don't just use Fibonacci to know a retracement. I also use Fibonacci to know a target, and I still can use Fibonacci retracement to know my target. For example, if I have this bullish trend and I want to know not only the target, let's say the bounce, where it could bounce, but I can also calculate how much it could drop by just tracing the retracement of the bullish leg. So same thing, from the bottom to the top, I want to know how much it will retrace, and in this case, because it retraces more than 100%, I will be looking at 127, 161, and 261% retracement. As you can see, of course, you won't see perfect bounces, but sometimes you will see a consolidation. Sometimes it will get so perfect, and that we will see this on Bitcoin, that the levels are read perfectly. But you can see on this chart, the price drops all the way down to under 27, has a little bounce here, then it dropped to 61, has some kind of consolidation of a triangle shape on the 61, and then smashed down to 261. That's where it has a nice bounce. Okay, so this is an example how you can read the Fibonacci levels and make it a place where you can maybe attempt an entry and attempt also a sell. Okay, in this case, a sell for a short. Now, I always talk about confluences. Confluences means when you see multiple indicator or more Fibonacci matching up on a certain level. The confluence can happen between a Fibonacci and a level of support or resistance, or also between, for example, two Fibonacci levels. So if I trace more Fibonacci, um, and Fibonacci you can trace on every single time frame. Every time you see a drop and you see a little recovery, you can trace a Fibonacci there if you want. So I can trace a Fibonacci to know how much just this little drop will reverse. Okay, so in that case, I'm just gonna trace a Fibonacci from the top to the bottom to know how much this trend goes upward. In this case, 61%. Okay, then you can trace a Fibonacci of this bullish trend to know how much it retraced, and in this case 61% too, and so on. I can trace on this uptrend so many Fibonacci if I want. You just need to be able to spot the uptrend and the downtrend. In this case, from this low to this high, I can trace a Fibonacci if I want to, and see how much that price retrace just 23%, and goes back up, and so on. So while I trace more levels, and we will see this on Bitcoin, we can find confluences. Confluences is just when some Fibonacci level match. And why is that important? Well, it is important because I mean, you have like sometimes 3 Fibonacci on a single level. That means why? It's just a coincidence? No, it's not a coincidence, but it just makes higher your chances to get the level, because maybe more traders have drawn the Fibonacci in a different way, and they are going um, to make an entry there to long or short the level. If you have 3 levels that combine each other, well, that's even better. Okay. So in this case, sometimes I like to compare my previous Fibonacci with the one that I just traced in order to see similarities, because it's very important. For example, if I want to trace a Fibonacci retracement of this downtrend, and you guys might have seen this in my channel already, we can see that it retraced 61%. So the price, this is the first leg, and price recover 61%. Then we have another massive leg, okay, and I will retrace that Fibonacci up to down to see how much this downtrend retrace. You can see it retraces 61% too. And that's the first confluences. 61% Fibonacci retracement confluence with what? Confluence with this low. Okay, so when I have the previous low and also a 61% Fibonacci retracement, which is a very important level of retracement, usually price retrace 50 or 60 or 70 or 78. I mean, every single one is legit. But if you see a confluence, and we also have confluence with this previous high, well, now you got a high, a low, the 61%. So probably the chances that price will drop here are higher than if it might drop at 70 or 78 in this case, okay? Because it will keep its downtrend structure, okay? Those are the main leg, and so on. And right now we dropped how much? Let's check. This bullish leg retraced about 50%. So is it a good level? Let's check if there are some levels that could be interesting. We have this previous high, and we have a retest of that level, and also we have this high here that I can trace. Are there any confluences? Well, the confluences in this case are not, they don't match as much as the Fibonacci, except we have, for example, the 50% Fibonacci here, confluence with this high. So maybe it was a good support, but we can see that it really didn't hold. I mean, the candle didn't close yet, so remember, don't count for wicks, always count for the candle close, because this candle can still drop and close above this level, and there will be a level of confluence. Or maybe we have the 23% Fibonacci here, confluence with the 61% Fibonacci, and maybe that could be another level. So always, keep in mind price action, keep in mind horizontal levels of support and resistance in order to find these famous confluences. Okay, I'm charting on the weekly. I can chart on whatever time frame I want. If I go on the daily, for sure I can be able, I'm able to trace so many more Fibonacci if you want. For example, this uptrend is full of an uptrend, a downtrend, right? So sometimes you can use this polyline tool just to trace your up and down if you want. And that will help you sometimes also see patterns if you want. Maybe you can trace also less, maybe this is a false um, head and shoulder, and so on. So if you want, you can trace Fibonacci for every single wave. I can trace a Fibonacci of this uptrend to know how much this retrace, 70%. I can trace this, how much this retrace, 61%. How much this one retrace, I will probably have to select the lowest point here, which is this, right? And trace another Fibonacci, and this time we trace 50%. So what I'm seeing, for example, here, I'm seeing that every time the wave corrects down, it retraces less and less and less. So this time it corrects 70, this time corrects 60, this time correct 50. You know what? Maybe next time we'll correct 38% or so. And that's what it did pretty much. 38%. So that's how you can come up with some logical way to trace. You can see here, for example, 38%. I'm just doing this right now. I didn't remember that this happened, and then at the end it will probably fail. Okay, then you can trace maybe some levels that help you and so on. Okay. When you trace Fibonacci, remember this is the daily, as I was saying before. If I'm on a weekly, for me this uptrend can just be one single move. So in that case, I can also trace a Fibonacci that starts from the bottom, goes to the top, and see what happened, and then make my decision based on this. Okay, right now we have probably this important high that is maybe our short target for Ethereum, because it's just breaking. It bounced on 50%, went all the way up, and then it just went down. So maybe we can reach here. It's a level that has been tested once. We might have another retest and so on. Okay, so this is how I use the Fibonacci retracement. The Fibonacci extension is a little bit different, but before to arrive there to show you the Fibonacci extension, I just want to show you on this little trend how sometimes I use my retracement to know my target, and maybe there is something here that will give us some clue. For example, instead of tracing a Fibonacci retracement of this uptrend to know the retracement, I will just trace a Fibonacci retracement of this downtrend in order to know possible targets. Okay, so how I do that, again, Fibonacci retracement of a downtrend from the top to the bottom instead of from the bottom to the top. Okay, See, I trace from point 1 to point 2. In this case, I will have the extension, kind of the extension, I mean, a more retracement, I will say. So the under 61 and 261 can be my target. So if I was here, I didn't have this uptrend, I just trace Fibonacci and I can aim to under 61 or 261. And you can see that 261 was perfectly hit and price dropped all the way down. Okay. So this is how I use my target. I find this way more precise than the Fibonacci extension tool that I'm about to show you. And I can maybe trace another Fibonacci of this little downtrend and see if I can see some confluences. Is this logarithmic? Should be, yes. Okay, you can see now I trace another one and look at 261% is the target for this little trend. Instead of this 261 was the target for a longer trade, because the correction of course was longer. So if I trace a Fibonacci of a longer retracement, I will have a wider Fibonacci and so on. In this case, if I have some confluences, in this case I don't, let me trace also another Fibonacci here. Let's see if I can come up with a confluence. Perfect, we got a nice example here. So I traced also this correction, right? So look what happened here. We have a perfect confluence between what? Between two Fibonacci, the 261 traced by this and the 261 traced by this. So this becomes a very strong target, because two Fibonacci are telling me that that could be a target. And look how much the price comes back to the resistance, and it stays there for a while, then it drops and then it goes up again and so on. Okay, so that's a way for me to find targets. I just use Fibonacci retracement. I barely use the Fibonacci extension. Okay, I don't think I have to add anything else on Fibonacci retracement. I will add more information when I do Bitcoin on the monthly, because it shows very interesting points. Now, Fibonacci extension. The Fibonacci extension, instead of being a Fibonacci that you can trace by looking at 2 points, like our Fibonacci retracement, for example. So this is this downtrend. I want to know an uptrend. Okay, I use a Fibonacci retracement from point 1 to point 2. In this case, I have another point, which is point 3, which is the retracement already. So if I take the Fibonacci trend-based Fibonacci extension and I trace point 1 and point 2, and then I go up to the retracement, in this case I will have my Fibonacci extension that shows you many levels that can act as target. Okay, in this case, look how precisely the 161% Fibonacci retracement matches it with the target. Okay, so this is just another way I can trace a Fibonacci retracement on it in order to know if I can see some confluence. So I'm just going to trace retracement, and look how perfect they match, 261 and 161. Okay, I don't know if you guys understood how I trace the second one. It's just a Fibonacci retracement of this, a simple Fibonacci retracement, right? 261, and then I can trace Fibonacci extension from point 0 to point 1 and go all the way up. Look at the perfection of this confluence. This is what I'm talking about. Okay, so now you have two level, and also here you have the under 61 and the 100. In fact, price reaches there, and there is some consolidation, and then a future drop. Okay, so I don't have a I don't have an answer when I use some, when I use the other one. I just use both, and helps me to find confluences and so on. Sometimes if I see that I trace a Fibonacci that worked before, I will use the same one on another part of the trend. Okay, then if I see that that Fibonacci didn't really work, but the other Fibonacci extension worked, you know what, I'm just going to do the same way. Okay, just to find the similarities between the chart, okay, and the trend. Okay, what else can I add? Usually, you guys know I love Elliott waves. Sometimes when I see three Elliott waves, I like to trace Fibonacci retracement that comes from the beginning of the wave, and also considering the pattern. For example, here we have, we had a flat top pattern, and then a wave that started from here and made an Elliott wave. In this case, I will trace not only the main Fibonacci retracement, but I will always consider to trace Fibonacci retracement of the wave. So let's say the wave, I decided to start from here, the Elliott wave. I will just trace Fibonacci retracement of just the Elliott wave and just consider that as a possible bounce. We can see now 70 and 70%. That's where it could bounce. Okay, confluence with what? Confluence with the resistance of the flat top triangle. Okay. As always, I'm talking too much, but I mean, I think this is a very um, cool way, a cool tutorial that everybody should learn. I'm keeping very simple, even though I'm talking too much. Anyways, so I think I'm done on it on Ethereum USDT. Or can I add more? Maybe we can trace an overall Fibonacci of the downtrend, of this downtrend, to see how much it retraces, and it retraces 50%. If I can trace a Fibonacci retracement of the last leg also, I will have my confluence between 50 and 61%. So a very important level where price could have dropped, also swing low. So I have three levels, also swing high. So now I have four things that tell me, you know what, maybe there will be some action at those levels. Okay. Okay, I'm done with Ethereum. Let's go check Bitcoin right now. And you know, I've done so many so many tweet on this chart, because the confluences between the Fibonacci are just too perfect, in my opinion. This is the monthly chart. We can chart on the weekly if you want. I'm just going to chart the main moves, so because of that I will just pick the monthly, because I can see the retracements very well. Okay, and the start or beginning of every bull run. If you guys see from the monthly, right away I can just select the bottom of 2011. I'm not gonna go before, because I mean Bitcoin was pretty much unknown there. And what I see a nice push upward, and then the first real retracement. Then we had another push upward, and then the 2015 retracement. And then, I mean, I don't really count for those little moves, even though if I can do that if I go in the lower time frame. But because I'm charting the monthly, my main retracement is of course this one, and so on. Okay, now we are here, and I'm just gonna stop here. So how many Fibonacci can I trace here? What can I do? First of all, remember we are on a logarithmic scale. I have to use a logarithmic Fibonacci. Okay, so what can I see on this Bitcoin idea? Well, we have for example, an uptrend here, right? Do we have an uptrend? I want to know how much this uptrend dropped. Okay, so what I do, Fibonacci retracement from the bottom to the top, and I move all the way. What can we see? Price reached 70% but closed on 61.80%. and I have already a data here. Okay, so what can I do with this data? I chart the lowest point of the bearish market to the top of the market, and I can see how much Bitcoin corrected. Now, this is important. Remember to use logarithmic Fibonacci here, because if I don't have that, of course, things will become linear, and look what happened. My level screwed up. Okay. Look how important is this retracement. When we reached 20k, if I trace this Fibonacci retracement, I could have perfectly guessed the 6th level support. And remember how long price has been bouncing on the 6th level support, and also I could have exactly nailed the bottom of 3k at the moment. Okay, so that was another important retracement, Fibonacci retracement, that could have totally told me to buy a 3k. Okay, so those are just a few interesting concepts. Now let's check the extension. So if I could have if I could have guessed the 20k somehow if I was here at the bottom. Let's check, and let's make this a nice example. So I'm just going to close this, and I have here my 0, 1, 2 point that I need in order to trace my extension, right? Trend base Fibonacci extension from the bottom of the 2013 correction to the top of the trend down to the correction. What levels do I come up here? Let's make the most important one, 100%. Let's make it red. 127% and under 61%. Let's remove the green box, and let's see what we come up with. Check this out. So what we got, we smashed the target of around 17-18k with just a simple Fibonacci extension. We have a massive confluence between under 27 extension and the 23, which was the 6k level, reason why price of Bitcoin dropped there and stayed there for 9 months. And then price drop all the way down, confluence between 100 and confluence with 38%. Don't you like it? It looks like magical sometimes. And that's it. I mean, we could have got the bottom also by tracing a Fibonacci extension. So this is a way that this is something that I noticed that it's ridiculous perfect. Okay. Let's see what would have happened if we traced a Fibonacci retracement of this bearish trend. Okay, just a simple one. Okay, so what we do, to trace a Fibonacci, I want to know how much this trend retrace upward, and when to trace from the top to the bottom. Let's see if I come up with some confluences. Let's see. I just want to actually, let's see what we got here. That sounds interesting. I have to say, on long-term time frames, especially the monthly, I rather use the extension, because most traders use more the extension to find the target rather than the Fibonacci retracement. But in this case, I'm not sure if I have any good level that match with my chart. No, in this case, not really. It wouldn't help me as much as the extension. So sometimes the Fibonacci won't tell you too much, and you have to work your way out and look and see which one will help you the most. Um, Let me check. Let's check previously what happened. For example, if I trace an extension of this 0, 1, 2. In this case, the extension helps me to find a possible target, the 61, the 38%, a bounce on the 38, then price reach it to 50%. Look how well those Fibonacci levels confluence with the price action. So price reach 61, drop to 38, stays on 38, goes back up to 50%, drop to 23, and price goes back up. So in this case, the Fibonacci extension worked way better than a Fibonacci retracement itself. And then we have a massive wick also here. That's kind of okay. In this case, you see, if I trace the Fibonacci retracement, I don't have too much confluence in the chart. Okay, the level don't correspond as much, especially the high. So reason why I will use the extension to find the target as I use the extension from this move, because I noticed that it works. So I will just do the same thing, because probably the traders have been following the same kind of analysis and so on. What else I wanted to show you here? Oh yes, the chart that I posted, the last chart that I posted, I found this very interesting. The fact that price, if I switch to weekly, we can see better. And remember, when we switch time frames, things will change. Like candle close will change, so you might have different levels, so you have to be careful. Because in this case, if I connect the top of the candle close matches with the bottom of the 2014-15 downtrend. Okay, and what happened here in this trend? Price drops to 38%. Price dropped to 38%, goes back up a little bit to 23, and then dumps to 61% in order to match the previous high support. Okay, so that's the same things that is happening right now. I don't know if there is some similarities in the trend, but we can see that price is dropping to 38, goes back up to 23, and you know what? It might drop where? Not to 50. I mean, it could also drop to 50, because there is a low here. So it might drop and then drop even lower, but that's the most important high, and that will be a perfect fractal between this level and this level, and this will match with a very, very, very important retracement, which will be the 61 retracement. It's very rare that we see price bouncing on 38 and then go up and moon all the way up. I mean, it happened especially in early stage. For example, at this level, right? Price increase and just retrace a little bit and then mooned. Okay, but we reach a point in the market where Bitcoin is getting so much popularity, then it won't be crazy to see it drop down to 1K to do a full 61% retracement and then go back up. I mean, these are just a few scenarios to show you how I can analyze and use Fibonacci in order to see this possible entry, possible targets, possible confluence in the chart, and so on. Okay, I don't think I have to add anything else. Please subscribe to my channel if you can, and feel free to post anything in the chat regarding this video, and I will be happy to answer all your questions. Thank you so much, and I will I will text you guys later. Bye.